What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the indices, break down what the charts are telling us, what I do project to happen for tomorrow, and why you should be very, very cautious during times like this. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 4 days. I also have a Webull link down below as well. If you guys deposit just $1, you're guaranteed up to 12 free stocks. So once again, I have 2 offers down below. They both end in just 4 days. Check it out before they run out. With that out of the way, let's get on with the video. So anyways, when it comes to SPY, we actually closed up about 0.19% for the day. Not a very convincing day overall. And on the daily, we have an indecision candle that ended up forming. Now, I want to note that going into the last 7 trading days, like this, you could see SPY was down, testing the 200 moving average, bounces up to the 50 moving average, back down to the 200, back up to the 50, and we rejected off of it. So we're just going back and forth and back and forth, and we're continuing to see the market follow this trend. We are kind of sandwiched between these two very important moving averages, and I believe that this may continue as the days go on. Now, I want to note something very interesting about SPY. We don't actually have too much economic data coming out tomorrow or even on Wednesday. I would say the bigger days are going to be Thursday and Friday. All right. But until then, I want to just talk about the options chain. Now on SPY, you're going to notice that there's nothing like crazy happening on Tuesday, on Wednesday, or Thursday. The options are pretty dry, even though we do have some high put to call ratios. For the most part, it's actually pretty dry. And we do have a max pin at 395 tomorrow. But what is very significant to me is Friday. All right, Friday is the big day because we have about 1.6 plus million puts expiring with the 395 max pain with the 2.6 put to call ratio. So the majority of individuals have SPY puts for Friday, betting SPY is going to tank. And this is making me think there's a possibility that by Wednesday we might see the market pull back quite a bit. And unless the market, continues crashing and it breaks below important resistance, unless that happens, the market is most likely going to get a bounce for the end of the week. And we might see something very similar to what happened last week, where at the end of the day on Friday, the market just ended up pushing up to squeeze shorts. And this could be what's on the market makers' minds. So now what does this mean for SPY? Well, in my opinion, let me break down the bullish and bearish possibilities and what these important resistance and support levels are telling us. So our resistance is at the 50 moving average at 399. Our support is at the 200 moving average at 389.06. So almost around the 390 zone, 389 to 390 zone. And we're just going back and forth, right? But let me just show you that on the daily, there is a possible head and shoulders that could be developing. And let me actually just close out my RSI and try to make this bigger, because I know people have mentioned that my charts are a little bit too small, so I'm going to try to make this bigger for you guys. But anyways, looking at this, we have a possible left shoulder here, a possible head. And if we want to form a right shoulder for a head and shoulders, we have to see SPY break above the 50 moving average. We have to get back to about 400 and break above it. We have to, because so far we're getting rejected as we come very close to this resistance. If it breaks, that's going to be the bullish case, and we're going to form this right shoulder. The bearish case is going to be us breaking below the 200 moving average around 389 to 390. If that breaks, this thing is going to crash all the way down to 385. If that fails, then there's the notorious 380. And if we break below 380, a lot of algos are going to be set to selling even harder. So please be very careful. But I'm not really counting on either of these being broken by tomorrow. I think we're most likely going to see the market end up pulling back a bit. maybe cooling off just a little bit first before we try to bounce off the 200 moving average by like Wednesday or Thursday. That's what I think the odds are favoring for now. And I believe we're going to continue to stay in this range for another couple of days. So, once again, be prepared for both the bullish and bearish cases. I went over both of them, but I think the odds are favoring we're more likely going to see SPY kind of trade sideways into the morning and eventually start to downtrend as we get closer to Wednesday and possibly retest the 200 moving average and get into the very low 390s. I think they might try to short her down. The market makers might give the shorts the victory for the next couple of days so that by Friday, they would benefit if they pump the markets all of a sudden and cause pain for shorts. That could be what their plan is. If that is it, we could be seeing this actually, potentially forming, at least for the short term. Now, once again, that's just a possibility, and that's what I think is going to happen. Be prepared for anything. But once again, the odds are favoring us potentially coming down for tomorrow and also for later. Make sure you watch 393 and 395 for tomorrow, two important support zones. For the triple Q, I just want to note that on the triple Q, we have this major resistance zone between 310 and 313. Let's just make this a little bit easier to see. So around this zone, we keep getting rejected off of this, and it looks like we got another rejection for now. Our MACD is actually getting tighter, the histograms are getting smaller, and the PPO is actually showing some signs of weakness. What this tells me is the QQQ, it doesn't have to crash necessarily, but it might actually cool off a bit, and the odds are favoring that. We have resistance around 310, 313, and 315. We have support. The next major support is going to be around 306, and then we have 303, and then after that we have about 300. I believe, be prepared for anything, but the odds are favoring the QQQ most likely cooling off a little bit more and getting to about 306, maybe even 303. A cool off is completely healthy. We need our RSI to also cool off. Our RSI right here needs to cool off just a bit. That would be completely normal and it would be very healthy at the same time. So I do think the odds favor that potentially happening, especially because Apple's about to form a very, very important pattern. I'm going to show you that in a couple of minutes. And also because of the VIX. The VIX right now is at 20.6. It's down over 5%, but the problem for the bulls, is the VIX is actually getting very close to a very important support zone. Notice that the VIX has a tendency of bouncing off 20 or very close to 20. We're coming down, we're getting very close to 20. We might bounce off of this. If that happens, this is going to be because of the market potentially pulling back some, and this would actually help the VIX try to bounce. That is very possible if that's the case, and if history is about to repeat itself where the VIX tests this 20, that could end up playing out. Now, what else is worth noting is Amazon. Amazon's actually showing more signs of weakness. It's continuing to get tighter. In my opinion, if Amazon breaks below 98, we have the potential to retest the 96 zone. If that fails, then there's going to be the next very important level is going to be 93.2, and then this gap fill all the way down to 92s. That is possible, and it would be very healthy for Amazon to cool off just a little bit more. Completely fine, at least for the time being, but I do believe the odds favor that a little bit more. Our very important resistance is between 100 and 102. Please be ready for that. As far as Tesla goes, this thing is actually getting tighter and tighter. We're fighting to hold this support zone right here, this line. And we also have on the hourly, we have support at the 50 moving average. So around this 190 zone is very important support. I think Tesla's going to pull back to test it. But I don't know if we're going to hold it or break it because we are getting tighter and tighter right here because we also have this resistance line right here. If you're bullish on Tesla, we have to break and hold 195. If we break and hold it, we manage to hold it for a long period of time, it's most likely going to fly to 198.5 to 200. If you're bearish on Tesla, we need to break below 190, and then we're going to retest 188. If we retest 188, we have to hold it, because if we fail to hold 188 and we just start dropping hard After that, we're going to most likely fill the gap and come down to the low 180s. So very important critical zone for Tesla. In my opinion, the odds favorite retesting 190 and maybe even dropping a little bit because of the weakness in the QQQ, the potential weakness for SPY, and also because of what we're seeing on the VIX and the tech sector right now. So the odds are favoring Tesla maybe cooling off just a little bit. Once again, maybe retesting like 190 to 188 is completely fine. And just be prepared for the other possibilities I mentioned, but I just noted that's most likely what's going to happen. Nvidia is testing the 50 moving average on the hourly time frame. Right now, we have a bearish development right now. There's not really any divergences forming. I believe Nvidia might try to reclaim like this 266 zone and fail. And if it fails, it's going to try to hold like 264. That's a very important level. That's where the 50 moving average is, the 264 zone. If it fails to hold that, it's going to come all the way down to 260. The odds do favor Nvidia potentially coming down. Now, once again, if this thing wants to become bullish, we have to hold 266, then 270, then this 274.5 area. The odds favor it, most likely trying to push up, try to get a counter bounce, then failing, and end up just coming down to 264, at least for the time being, because support over there is actually quite significant. So I don't know if it's going to break below it that soon, but if it does, it's going to likely come even lower. Apple actually held 158, very close to my 175. I'm sorry, 157.5 target. It actually held 158. So the bottom line is it was very close to my target. We did get a red day on Apple like I predicted. The real question is, where's Apple going to go? We had a topping process right here. Apple's starting to continue to drop. There's not necessarily a major divergence as of right now. I am seeing actually the RSI was higher, a little bit higher than where it is, like around this zone. So there's a small divergence technically. This is going lower, this is going higher, which means Apple might start to break down a little bit. I don't know for sure because Apple is still trying to hold these important levels, but the odds do favor us retesting 157.5, maybe breaking below it and getting to about 155. If that happens, this would help drag SPY down, also the QQQ, and that would be pretty healthy because Apple is kind of overextended. It's been just rallying for quite a while for the last couple of weeks since March started. It's just been going from the 140s all the way up to 160. Completely fine, but I just want to note that that is what the odds are favoring. For Apple to turn bullish, it has to break above 160, then get to 162. That's a possibility, but the odds of that happening are a little bit less likely given what the market makers could be planning and what would benefit the market makers in essence. For the dollar, I thought the dollar would just try to hold around 103. We actually came a little bit below that at 102.84. So the real question is, could the dollar be forming possible slanted inverse head and shoulders and keep going? It is a possibility. But as of right now, the dollar is still not looking as strong as before, especially on the daily. It is still downtrending. The MACD is starting to curl a bit. So what I'm going to be looking for is the dollar maybe coming down to establish a higher low and then maybe trying to bounce. If that happens, this would be bearish for the markets. What has been a little bearish, though, is the fact that the 10-year Treasury yield is popping again, as I predicted. I told you we'd probably see this thing retest the 200 moving average. We actually broke above it, so it went even higher than I thought in one day. Now, there's this gap down here. I don't know if it's going to come down first, retest almost 34, then bounce and keep going, or if it's just going to keep going from here. Either way, that would be bearish for the markets, at least temporarily. AMD is actually down about 1.37%. Once again, this very important level I mentioned was 97.6. We actually closed at 96.61. If we keep dropping, make sure you watch this 93.5 area. That's going to be very important. Alongside, there is some support at like 95, but 93.5 is going to be more significant. So make sure you watch that very carefully. The overall trend looks like it's curling, it's losing momentum, and it is looking like it's going to be testing the mid to lower 90s very, very soon. So with that said, I think I went over the majority of the stocks out there, from AMD to Nvidia to QQQ and SPY. So please have an absolutely incredible rest of the day, guys. I thank each and every one of you so much for listening. I really appreciate everyone down there in the comments and everyone that watches these videos. And I just want to say, please enjoy life, do what you have to do, and please, please, please do not let these markets stress you out too much. I personally sometimes go through moments where, I end up getting a headache from watching charts for too long. Sometimes it happens. So don't forget to give yourself some breaks, and don't forget to do what's best for your own health and your own lives. I thank you all so much for listening. Remain calm, cool, and collected. The market to the moon, because the long-term future is still very bright. And peace out.